to trade digital assets, digital currencies, and to use digital stablecoins. So what retail isn't seeing, what crypto natives isn't seeing, is that huge wall of money, which I expect, by the way. I expected it to come in, and I expected it to be quicker. Okay, I thought, because it's what I do personally, and what I see across Lmax is, I thought about 5% of the world's assets would now be in digital assets. We're not quite there. It's sort of single-digit percentage, 1 or 2% right now. So I thought we'd probably be up around 20 trillion by now. It's just going to be a bit slower.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's research video, we're going to be listening to some panel discussions with giants the likes of HSBC, Lmax Group. We're going to be diving into some groundbreaking fundamentals from Canton, maybe even get into some stellar announcements, DTCC announcements, Euroclear announcements, major clearinghouse announcements, showing you all that even though we are in a sort of a market slump right now, a market downturn, massive developments in regards to the building out of the future financial infrastructure are for a fact taking shape right before our very eyes. So I want to start off here. Shout out to the block for this most recent panel discussion that took place, where we have David Mercer, the CEO of Lmax Group, speaking, and he says something that is absolutely monumental. Now, this video clip is about 1.5 minutes to maybe 2 minutes long, so listen closely to what he says. But why are we going to listen to what the CEO of Lmax Group says? Lmax Group is a London-headquartered global financial tech company and the leading independent operator of multiple institutional execution venues for FX and cryptocurrency trading. You can see that they operate in over 100 different countries, and they process over $25 billion a day.
Right, so the political events that are going on, the world events that are going on now, look at the price action of gold, look at the price action of oil, and then look at the price action of digital assets. And you're going to see a lot of resilience and robustness there. So that means you have this strong foundation. Now, what's changed? Number one, education's changed. So just to go over that point again, 58% of the banks we asked said they're planning to offer digital assets in 2026 or 27. 30% say they're already active. Now, they're not buying and selling Bitcoin necessarily, but they are interacting with stable coins. Only 8% of those global banks say they're doing nothing. 100% say they have crypto trading interest. Okay, so that education's changed. And then what have they actually done? 90% stablecoin interest, 45% custody interest. So first thing they've done is understand digital custodianship. That's the first step, right? Because best will in the world, and I have a lot of friends out there in the digital world that are offering digital custodians, but when you go and speak to the leading banks, leading institutions of the world, they're going to need large balance sheets, S&P ratings, that type of thing to look at custodians or safety of the money. But 45% have now done that with custody. 36% are looking actively at tokenized real world assets. So this is what has really changed, right? So under the surface, right, you've got these foundations. If you like, they've enabled themselves to trade digital assets, digital currencies, and to use digital stablecoins. So what retail isn't seeing, what crypto natives isn't seeing, is that huge wall of money, which I expect, by the way. I expected it to come in, and I expected it to be quicker. Okay, I thought, because it's what I do personally, and what I see across Lmax is, I thought about 5% of the world's assets would now be in digital assets. We're not quite there. It's sort of single-digit percentage, 1 or 2% right now. So I thought we'd probably be up around 20 trillion by now. It's just going to be a bit slower. But what you're seeing is, from the bank's perspective, from the asset manager's perspective, from the brokerage perspective.
Before he continues, he just said he expects 20 trillion. And he expects this wave of capital to unfold. Y'all, we are sitting at a mere $2 trillion right now. Okay? That is a 10x in market cap from where we currently stand. That is massive, right? That is a massive increase just in terms of asymmetric opportunity. Let's continue to listen to what he says. You see now why I wanted you all to hear this? This is crazy. And this is coming from a guy whose organization processes $21 billion a day. At least that was according to like 2021 data. They probably process more now.
You're seeing this real enablement. I'll give you one stat just for Lmax Group. Over the last 12 months, I've had 85 new institutions trading more than one asset class. 85. That's an absolute number. And that's split mostly between the trading firms and the brokers. I haven't included the banks in that. Now that's huge. And I expect that to continue, and we're seeing that extend. So that's what's happened. And just to summarize it, you're seeing custody and you're seeing credit intermediation have really happened over the last 3 years, which means most of the enablement is ready. The one bit we're missing is regulation and that framework. And back to Namek's earlier point about...
he just said, everything is ready except the foundation of the regulatory clarity. Everything is ready.
The offshoring, a lot of this is still happening offshore. But if you look at some of the prediction markets right now, they're saying clarity has a 60% chance, as we sit here today, 60% chance of being passed. I think that's key. When you have, no pun intended, but when you have that clarity of regulation globally, you really will see this wall of institutional money entering. And the short answer, Larry, to what's happened recently is that they're ready for everything else. They have the custody, they have the market access, they have the market data, they have the clearing mechanism. They're just waiting for that rubber stamp and that regulatory approval. And then I think you will really see digital assets achieving the significance that perhaps we expected before now.
Wow. Right. What a time to be alive. That's not coming from some just random bloke on Twitter. That is coming from a gentleman with valid credentials, with an organization rap sheet that partners with some of the largest, if not the largest, financial systemically important banks and trading firms in the world. And he's telling you all what he believes in, that he thought the market would be around $20 trillion by now. And we're just not quite there yet. We're still early, but that wall of capital is coming, and it's coming when we get the regulatory green light. So stick around for part 2 of today's video breakdown. We're going to dive into some documents and play some other important video clips from some of the research segments that we have found inside the private CYPRX Discord. If you guys enjoyed this quick video breakdown, do me that favor, smash that thumbs up and subscribe. Again, shout out to the block for this podcast. Just came out roughly about less than a couple of hours ago, 34 views. Why it's so important to be a part of a community like the CYPRX research team is because we're watching the videos, the panel discussions, we're reading the documents that nobody for some odd reason wants to tap into. If you guys head over to CYPRXtrading.com, you can tap into our private Discord. You have so many different sections of just good, solid research that is non-retail, non-mainstream based, and it gives you the good, juicy stuff that everybody should be, again, paying attention to. The documents from the systemically important organizations, the central banks, the clearinghouses, IMF, World Economic Forum. All those documents are inside the Discord. In part 2 of today's video, we're going to be diving into some of those documents. So I'll see you all over there on part 2.